everybody, welcome to this end of year special show which is part of the top 10 influential events of 2021. My name is Julius the Kempenaer and I'm presenting to you from Amsterdam in the Netherlands. I am a senior analyst here at StockCharts.com as well as the creator of relative rotation graphs, and I am the host of Sector Spotlight, which airs every Tuesday from 10:30 to 11 a.m. here on StockCharts television. For today's show, for the special, we were briefed that we needed to take one chart and use that as our most influential chart, most influential event for 2021. And we could use additional charts to argue our point on why that chart was so important. On one hand, I think I'm lucky because I work with relative rotation graphs, which basically show a lot of relationships in one chart. So I can use one chart and still talk about a lot of relationships and a lot of stuff that's going on or has been going on in the market. But on the other hand, it's also difficult because there's so much happened. And of course, it's always the case that when you look back at the end of the year, a lot of things have happened. So what is the most influential? What was the most eye-catching thing for, in this case, for me as an analyst and as a market observer? So I've been spending the better part of today basically looking at a few RRGs and the supporting price charts that always go with the RRG. And there wasn't really one particular type of sector, one particular type of rotation that of which I said, yes, that's my thing, that's my most influential thing. However, going back and forth over a decent amount of time, I noticed that 2021, if you look in terms of sector rotation, has two faces. So I want to title this presentation, although it is the top 10 influentials, but my part's going to be the two faces of rotation of 2021. And I'm going to show you why that is and what I mean with that, and then look at the accompanying charts and the RRGs. So if we look at the screen right now, then you see two RRGs. They're both RRGs of the 11 sector ETFs, as if you have seen Sector Spotlight once or when you've read one of my blog articles, you know what I mean. However, the left one here, and you just pay attention to the time span, shows you the first 26 weeks, so first half year of 2021. And the one on the right shows you the last 24 weeks, which is basically the second half until now, because we still have about 2 weeks to go. It's the 15th of December, so we have it's a little bit more, but let's say 2 weeks to go to the end of the year. So that's 24 weeks. So this still is 24 weeks, showing you the second half of 2021. And this one is 26 weeks, showing you the first half of 2021. Now, if you look in the tables below those graphs, then that's what caught my eye, because this is the first half of 2021. Now, we're not going to talk about all the sectors, but I'm going to pick a few of the major sectors and the most important or eye-catching rotations in my mind. If you look at the top three here, then you can see that in the first half of the year, it was real estate, it was energy, and it was communication services. Those were the sectors that were handsomely beating the S&P 500, which was up 15% halfway through the year. But real estate was up 30, energy was up 30, and communication services was up 20. And when I looked at the second half of the year, and I look at the top three, then we have technology, and we have real estate. That's coming back as good, although it rotated negatively and even briefly went into the lagging quadrant, but in terms of performance, it was still pretty good. and we have consumer discretionary. So I thought, hang on, where were those in the first half of the year? So I started looking here at technology, which was okay, but more or less in line with the S&P 500, and the tail wasn't that good. That little hiccup here was what brought it on top of the S&P 500 at the end of the first half year. But if you go back a few weeks, then it was actually underperforming the S&P 500. So this is the most important sector of the whole universe. So where was discretionary? So discretionary here, very good at the end of the year. There's actually a strong underperformer. If you look at the tail of the consumer discretionary sector, it was way down on the left. So the idea started popping up in my mind, started thinking that this year actually has actually two quite different rotations, two quite different phases of performance. Because, as I said, discretionary, which was at the bottom of the list in the first half, is showing up as a stronger sector in the second half. And technology, which was sort of in line with the market, but I bring it into the show because it is the most important sector of the S&P 500, is now actually the leading sector. It's the top performing sector in the second half. So if we bring in the individual charts to see how this happened, because we've now established that especially in the first half of the year, the performance was driven by real estate, energy and communication services, and not so much by technology and discretionary, while in the second half of the year, technology and discretionary and real estate were the driving sectors, but the underperformers were energy and communication services. Look at communication services. It was one of the stronger ones. It was up 21%, handsomely beating the S&P 500 in the first half of the year. And now in the second half of the year, it's actually an absolute underperformer. So it's -7 while the S&P is up 7. So that's a -14% in relative terms. That's massive. You know, first half of the year was super strong, and then second half of the year super weak. So I like to go into the individual charts and see the charts behind those rotations. And in order to do that, I am going to have this chart here. I have the duplicate of this one here as well. So this is the same chart. And I have the individual price charts here on the right. So let's start with the energy sector. If we look at how energy performed, now let me bring that up here in energy. So that's the second half, first half of the year energy, super strong, and you can see why that is. It actually rallied really fast and then stalled. So the performance, the relative performance of the energy sector was actually clearly made in the first half of the year, and then it ran into resistance, and the relative strength line did exactly the same. And actually, you know, going forward, you can see here, although the strong performance in this piece here, because that's what's been driving this piece here, still not managing to get above that resistance level. So for the energy sector going into the new year and a year and a new year, I still think that it's going to be under pressure, both from a price perspective and a relative perspective, until relative strength actually can take out this overhead resistance here. Now the second sector that had a massive performance, that's the real estate sector. So this is the first half of the year, and you see a nice strong move, and then it started to roll over towards, you know, when it started to move into the second half. And if we bring it here, then you can see that it was actually an underperforming sector. Not if you go over a 24-week tail, then it's outperforming, but when you make this shorter, you will see that it dropped below the S&P 500 in shorter time intervals. It's actually very briefly inside the lagging quadrant, and it's now starting to pick up again. If we look at the chart here, then you can see why that is, because you can also see that here the initial performance for the real estate sector was super strong until roughly September, so very, very, well into the second half. If you look on the relative, actually sort of bottomed right at the transition into the new year, into 2021, and then it rallied. This is a relative rally, and it also stalled, just like the energy sector, stalled against overhead resistance. Didn't do a lot here, it just moved in line with the market. This is a horizontal RS line, that means that it's moving in line with the market, with the S&P in this case. And then we had a little drop, and then from here on we started to move up again, and then the RRG lines are picking up. And here also, for the real estate sector, we do need a break above resistance in that relative strength line. Now, unlike the energy sector, the real estate sector is already breaking above its price resistance. So that's a good thing, which means that the real estate sector going into the new year, end of the year, into the new year, has a good opportunity to actually pick up more relative strength if this break can hold. The third sector that I want to bring on is communication services sector, because that was a massive move. If you look at the performance here, the first half of the year, very nice performance, over 20%. You see a nice rotation from leading through weakening back into leading. But if we move to the rotation in the second half, then you can see how that rapidly changed. Because here you can see that rotation. Oh, sorry, real estate. We need to go to communication services. This is where it actually, this is the end point of this chart here. So this end point here is the starting point of this one here. So you can see how rapidly that move turned around and hooked back into the lagging quadrant. And you can see that it's recording a -7% performance in the last 24 weeks. And the price chart tells it all. You can see how strong communication services moved into the second half of the year. And then started to lose here, but it dropped in relative terms already in March. In March already you had this rapid drop down in terms of relative strength, and now we follow higher, but in relative terms not much happened. It was in line with the market. And then we break out of this trend channel, and then we follow through with a break below support, and you can see how steeply that relative strength line is now dropping, combined with a drop in price. I think going into the new year, this sector needs a lot of work on the upside, both in price and relative strength, to become more interesting. And hopefully the RRG charts will actually start to show improvement when it will start to pick up, first in terms of relative momentum, later in terms of relative strength. But for the time being, I don't see that happening yet. Now, the most important sector in the universe, the technology sector. If we look at the performance on the RRG, then in the first half of the year, it was barely above the S&P 500. And you can see that tail is, all these observations are very close together. It's just picking up a little bit here. It actually underperformed for quite a few weeks in the first half of the year. And then in the second half of the year, the technology sector actually picks up and makes a nice rotation through improving into leading, and actually very recently jackknifed back up into the leading quadrant. And those are the rotations that are usually very, very strong. Now, if we look at the price chart and the relative strength chart of the technology sector, then you can see exactly why that rotation happened as it happened. Here's the start of 2021. You can see that the sector was actually started to underperform, and then towards the end of the first half, so this is July, so this is the first, you can see that towards the end it started to pick up, and that's represented by the RRG lines. That drop put it into the lagging quadrant in the first half. That's what you see here. That's when it rotates through the lagging quadrant. And then it starts to pick up. When the green line moves above 100, we move into the improving quadrant. That's right here. And then in the second half, so we're now in the second half of July, and that's when this second RRG starts here. You can see that it is pushing into the leading quadrant, and that's happening when the red line crosses above 100. And we're now still there. And you can see why that is happening. The RRG lines are picking up this rise in relative strength at a very early phase. We push against resistance, but only when we actually broke that resistance in terms of relative strength, the technology sector started to move higher and accelerate, helped of course by a break to new all-time highs in price. For the time being, there are no signs of weakness for this sector going to the end of the year and the start of the new year. So I think that for the next few weeks, we could have still some upside in both price and relative strength for the technology sector going forward. Now, the last sector that I want to highlight is the consumer discretionary sector. And if we bring that up on both RRGs, so we have consumer discretionary here, and I'll do it on the second half of the year as well, then it's here. Again, look at the rotation in the first half of the year. The sector performed about 8%, which is like roughly half, a little bit more than the S&P 500, which puts it into the lagging quadrant and still moving further into it at that point in time, somewhere in July. If you go into the second half of the year from that endpoint, so here again, this is the endpoint of the first half of the year, and this is the starting point of the second half of the year. You see a completely different rotation. Now, if we look at the price chart, then you can see that, despite the fact that this trend is very nicely moving higher in terms of relative strength, it's quite different. From the start of the year, you see a massive decline that actually goes on to August. You see that the pace is slowing down, the pace of the downtrend slowing down. That's why the momentum is picking up, because it's less bad at that point in time. And then it moves against that resistance level, and relative strength goes into a transition and starts to pick up. So the first thing that happens is that relative strength momentum is picking up and goes above 100. That's happening right here in that RRG chart. And then you can see that slowly that relative strength starts to pick up and accelerate. And that's where you see the red RS ratio line picking up and eventually going above 100 as well. And that's what's caused that strong rotation into the leading quadrant, and actually that strong performance that we've seen over the last 24 weeks. Right now, we bounced off resistance in terms of relative strength. We're still at very high levels in terms of RS ratio. We have plenty of room to the downside for this sector to go through a correction without harming this uptrend. But what we also for this sector would like to see, we need to see to make a push into the new year on a strong relative strength note, we need to push above this overhead resistance in terms of relative strength. Whether that's going to happen or not, that's hard to tell right now. We just have to monitor this chart and the RRG chart to see how that rotation plays out. But I thought it was quite interesting to see how those sectors, energy, real estate, communication services, technology, and consumer discretionary, actually showed two phases. They were, all five of them, either very strong at the start of the year and then very weak or weaker towards the end of the year, or they were very weak at the start of the year and then they're very strong at the end of the year. And I think when I noticed that preparing for the show, what actually clicked in my mind was that that's why I think that these RRGs are so powerful, because they can help you to pinpoint a shift from one sector to another and help you make smarter decisions in terms of allocating capital to one or more sectors or deallocating capital for one or more sectors of which you think that they are underperforming. Anyway, I hope to be doing this again in the next year, in 2022. And if you want to watch the show Sector Spotlight, we'll discuss all of this. We'll discuss sector rotation. We'll discuss asset class rotation, as we've been doing for the last 108 shows. Actually, last week I recorded the 108th episode of Sector Spotlight, and we talk about this type of sector rotation every week. I hope I gave you a little bit of insight in how I look at the rotations that took place in 2021, how they influenced the performance of the S&P 500. And as you can see, looking back almost 52 weeks, there can be quite big differences between sector performance. And RRG is not fail-safe, it's not the holy grail. It will not give you a one graph tells all, but I still think that it will help you to get a better understanding of how sectors move vis-a-vis each other and vis-a-vis the benchmark. And eventually, I hope that will help you make smarter decisions in your portfolios. It wraps it up for this end of year show. I hope you enjoyed it. And let me take this opportunity to thank you for watching Sector Spotlight throughout the year. Thank you for watching this end of year show. And I want to wish you a very happy holiday season, a very merry, happy Christmas. And if we don't see each other before the end of the year, I really, really hope that you'll have a very happy new year, a very good start of the new year. And I do hope to see you again in 2022 in Sector Spotlight and every other show we do here at StockCharts Television.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.